Good morning, I'm Tim Carter. I'm a Client Portfolio Manager on npower's Optimisation desk, and welcome to this morning's market update on Friday the 29th of May. So yesterday prices were pretty flat across the seasons really, with some support on the front month as participants closed out their open positions ahead of June default. Looking at today's market movements, the key drivers to look out for are: number one, gas systems again oversupplied despite a pickup in temperature driven demand. Number two, the power system is quite a bit tighter actually compared to the previous few days as wind drops off. And number three, finally, oil has picked up a bit from the lows of the month yesterday as US crude inventories fall again. Those are your main headlines. If you'd like any more information, please contact us on the email address provided. Otherwise, please continue to watch for a bit more detail. So firstly, going to look at the UK gas system in a bit more detail. As I said, we're oversupplied again with line pack about 6 MCM long at the moment. This is driven largely because of the LNG send out, which remains at 60 MCM nominated at the moment, although Southwark's only flowing 50 MCM right now. The cooler temperatures are driving up domestic demand, and along with CCGT demand picking up thanks to the lower wind, we're actually seeing total demand at around 213 MCM versus a seasonal norm just under 170. There's also a slight drop in IUK exports today, reflecting the firmer NBP prompt markets compared to continental hubs, while Rough continues to inject, but many of the medium range storage sites are withdrawing, totaling 12 MCM today. And therefore, if we continue to see prices pressured through the morning, we may see some of those nominations revised downwards. Looking at power system then, as I said, quite a bit tighter than recent days, with peak margins for this morning of just over 11 gigs. The drop in wind has come down to 1.4 gigs from around 4 gigs yesterday, but there's also the cooler temperatures driving up demand by around 3 gigawatts in total. Part of that comes about as embedded solar generation has dropped off from around 4.5 gigs to just 3 gigs today. Looking at the oil markets quickly, as I said, it's rebounded from lows of around 61.50 yesterday as EIA data contradicted previous reports to record a fourth consecutive drawdown in US inventories. This time it was 2.8 million barrels. Attention is quickly turning to the OPEC meeting for June to be held next week, where market commentators are largely believing that they'll continue their current policies of not limiting their production and put up with the lower depressed prices. A quick look at the fundamental balance for next week shows quite a tight outlook as Norwegian maintenance picks up again to keep caps on any Norwegian flows. We've also got temperature driven demand fairly flat with the end of this week, dropping off towards the end of the week. LNG send out though is forecast to be a bit lower than it has been for the last 2 weeks, as the forecast for tankers arriving in the UK is down a bit. Therefore, the big swing fundamentals to look out for next week will be the storage injections, IUK exports, and the CCGT demand, which could be suppressed a little bit thanks to some strong wind forecasts. That's it for this week. Join us again next week and have a good weekend.